Hi, good afternoon, everyone. Welcome back to the channel. In today's video, we're going to compare WPAY to MAGY. I've had a lot of suggestions from the audience that I should be invested in MAGY instead of WPAY, so we're going to go ahead and examine both. And we're also going to look at the Snowball dividend portfolio. So the market has been a roller coaster the last couple of days with tariff announcements about Greenland, so on and so forth. We obviously tanked yesterday, and we were up early today, then a little bit down. Now we're back up. It's amazing. The market kind of reacts to one or two simple posts on X, which is amazing. Okay, so let's look at Snowball analytics over here. So we've got, we're down to 203 over here, but we're back up 2,500 today. So if we just bought everything today, we'd be in great shape. But history matters, unfortunately. So let's look at, pretty much everything's down in this one. I may just have to liquidate the whole thing. AIPI is down 5%, Blocks is down 4.68, BTCI is down 6.05, FEPI is down 2.66%, and our favorite WPAY is down 12.07%. So this one, obviously, I'm contemplating dumping this one first. Haven't made any moves yet, but all in all, the portfolio at this point is down more than what we've made in dividends, which is cause for concern because we like positive ROI, not negative ROI. Year to date so far, annually, the projected income for the portfolio is still a 34% return, which you see here, the annual result. Let's do some comparisons here. Let's look at dividends, and let me see if I can just type in WPAY. Okay, so WPAY, so just on one fund, we're making almost 20,000 off of one fund per year. That's a 43% yield, but it may not necessarily be worth what it's dropping in value. I mean, the total return's probably still positive, but you would probably want to just pick the underlyings and invest in those as well. Welcome. Okay, so let's go back over here. All right. Here we go. Let me stop the share real quick here. I got a weird message. All right, let's go over here. Yeah, please smash that like button if you all are liking this, and comment any. All right, so let's see here for MAGY. Let's see what we got. All right, so here we are. Someone says, still in MAGY, can't dollar cost average out of WPAY fast enough. Yeah, honestly, I can't get called away fast enough out of it. Please smash that like button if you all could, please. It greatly helps the algorithm. Looks like we had 11 of you on. It's a pretty good live audience for an unannounced video. Okay, let's try this again. I keep navigating away from the page, and it keeps on going away. All right, so hopefully you all can see. So MAGY is at $50.65. I think it's a pretty stable. See, they went public at a good time. They were as high as 58. So if you bought in the summer, you're probably not too happy. So everybody that keeps telling me I should be in this, presumably most people are down in terms of their price return in this, because you can see even since April when it launched, it's lower than it was then. But it's got a 36% dividend yield. And the concerning thing is this is the MAG 7, so this should be performing a lot better. This should be outperforming, in fact. But let's look at dividend history here for this one. Hold on. So dividend history, it's obviously a weekly payer, and it's been paying the same exact dividend every week. So that's actually really good. The same exact dividend. Hold on, I think I'm sharing the wrong screen here. Let me go back over here. Oh, here we go. Sorry about that. Okay, so let's review the dividend history over here for MAGY again. All right, so, and then click this because this stupid thing doesn't want to navigate away without giving me a black screen. There we go. Okay, so we're getting 35 cents a week, which is pretty good. I mean, if you have just 1,000 shares of that, you're going to be in pretty good shape. But if you were buying 1,000 shares of it at the current price, it's going to cost you obviously over 50,000. But you're getting 1,000 shares times, let's see, 35 cents and change. Oops, sorry. It's about 350 a week, basically. So 352 times 52. So it would be a very similar payout to WPay, but we're hoping for less NAV erosion, obviously. Or I know some of you all like to call it a different term. I have to be honest, I think I'm personally about done with this whole dividend experiment because a lot of these funds just don't at least stay flat. Like the minimum that we want the price of the fund to stay flat, but we want the dividend. I think that's a fair balance. We're not expecting the fund to go up as much as the underlying, but if it could at least stay flat and pay us a decent, maybe 20% dividend or so, or a little bit higher, we would be perfectly happy with that. Let's see here. I dumped both 3 weeks ago. Maggie was okay for a while, but it started trailing behind MAGS by a large margin lately. NAV drop on WPay, 8K is 1K. Not sure what you mean by that. Anyone trusting Wiseway? By the way, let me go ahead and plug this tomorrow. We were having Sai back on from Tap Alpha, and he's running some of the best funds in the industry right now, I think. So we're going to talk about all of those funds from Tap Alpha. Okay, let's see. So we'll look up Wisespy. We'll take some audience suggestions here. We'll look up MAGO and Wisespy as well. All right, so Wisespy, I spy Wisespy pretty soon. I can see the future. I see it coming up. Oh, yeah, it's a yield boost one. I actually, even though I like Granite shares, I like their leveraged ETFs a lot better. I haven't actually touched any of the yield boost products, even though I was at the NASDAQ to celebrate the 1-year anniversary of the yield boost products. Okay, so this is 17 cents a week, so not quite as good, but it's a 51% yield. So far, this is what it's paid out, and it's on $17 a share, so it's a lot cheaper. So you can get you can buy in cheaper and get a higher dividend percentage yield. And then, let's see, the other one we're talking about, what was it? MAGO. This one just started, I believe. I was talking about this one, the last joint live stream I did. I was talking about this one. Yeah, MAGO. So let's look at this one. Oh, excuse me. 18% yield, so that's more stable. Let's see. Let me look at the chart. Oops. So overview, let's look at the chart. Since it's only been public for like 3 weeks, going on a month. And honestly, I'm seeing the same thing. We're already losing our NAV. So honestly, it's not that bad, but it's like $1.44. Yeah, it says it right here, $1.44 down. So, none of these funds really stay like exactly where they are, but this NAV decline, if we want to call it that, or basically price depreciation, is not as bad as some of the others. So this one might be one to keep an eye on. I need to see a little bit more from it. Obviously, Tuttle Capital, I'm going to try to get them on the channel. Obviously, they manage this one. But all in all, I'm thinking that we definitely want to see some better alternatives to WPay. And I'm thinking that I'm definitely looking to, get into some other stuff. So let's see. This one I didn't tell you, but it's 8 cents a week. So that's about an 18% yield. All right, let's go back over here again. Let's review the dividend yield for the portfolio here real quick. The comment says, do I like COYY? Not too much. A lot of these yield boost ones have dropped a lot. So let's see. He says, I can't tell which of the Granite shares would be trustworthy. I don't want to steer you one way or the other, but in a sense, I feel like yield boost is kind of like yield max on steroids. I love their leveraged funds. I trade them all the time. NVDL is probably my #1 fund, but yield boost I haven't really touched. And Mike here says he gets it. So we know what we're saying is valid now. Okay, so a commenter says, yeah, the Mag 7 is underperforming. Yeah, well, we know that the underlying is underperforming because the whole market's been down the last day and a half, but it's coming back. If you look in the last hour, it's coming back significantly. But the problem is, yeah, the underlying's drop. We participate in all the downside, but limited upside. It seems like literally with every one of these funds, we participate in all the downside with limited upside. So definitely cause for concern. I haven't seen any of these that have come up with a solution to that. So that's still pending. Someone says, "Is Maggie really great long term?" I'm on the fence about it. Honestly, I don't think any of these are great long term. I'll just be the one to go ahead and say it. I know there's a ton of dividend channels on here that are obviously pitching these funds, but I'll go ahead and say I don't think any of these are safe long term. We don't know enough about them. I mean, especially the newest funds, we don't have enough history to go by. Which is why, like I say, the bulk of my portfolio is not in dividend funds. I like the idea of trying to be in one and produce basically enough income to pay your bills, but I'm not going to go all in ever. So that's just me. All right, let's look again at the portfolio real quick over here. So we've got our dashboard, and then let's look at dividend view. So everything's up right now because the whole market's turning around. So the calendar, I like this feature a lot. Obviously, you can see the dividends expected for the year. You can see it's up to 57.29 per month. Let me make sure where it's actually sharing. Commenter says here, the only high yield fund families you can trust are Tap Alpha, Neos, Goldman Sachs, JP Morgan, Amplify. I probably agree with you. I got to look more into Amplify. They're on my list, but I definitely agree with Tap Alpha and Neos for sure. So we can see here on the calendar view, obviously the 21st, BTCI, WPAY, which is a weekly payer. Well, it's delayed. Today was the ex-dividend date, but it's delayed till tomorrow because of the holiday Monday. And of course, payout day for BTCI the 23rd. And then the 27th ex-dividend for WPAY, and then the 28th, of course, the payout date. The JP Morgan ones that I know of, JEPI and JEPQ, those have been solid. So I would agree on that one. But anyway, as far as this one, that's going to do it for us today. Thank you all so much for tuning in. My conclusion of the two funds I mentioned in the title, I don't think either one of them are like the magic bullet or the magic solution. But I would have to say Maggie's probably slightly better than WPay at this point. Commenter says, are any of the Roundhill leveraged weeklies? I think a lot of them are, right? But the leverage thing, I'm not really buying the growth and income experiment yet. I think there's a lot to be seen with that. So anyway, I will leave you all on this note. I appreciate the live audience here. We got a lot of you on. Please smash that like button and subscribe to the channel and join the Discord. And we'll probably do, for our next video, we'll do an options video. Well, actually, that's after we have Sai from Tap Alpha on. So keep an eye out for that. That's supposed to be at 12:30 Eastern tomorrow. And we will see you all in the next one. Take care. Have a good one. Bye.